Hey guys, welcome back. I'm Jeb Smith, Coldwell Banker Residential Brokerage in Huntington Beach, California. And today I'm playing like a Luigi because it's a Halloween and I'm doing a report on Halloween. Just kidding. So the Fed raised the Fed funds rate yesterday for the third time this year. And in the speech, they basically said that they were going to ease raising rates going further. So what does that mean? How does that affect you as a buyer, seller, investor in today's market? So let's take a step back here and just talk about the market in general. Where are we? What's going on? And if you've been watching these videos for some time, you probably have an idea, but you know, the market started off the year a little slow, kind of picked up some speed, and then kind of halted a little bit during the summer with regards to buyer demand. The Fed started lowering the Fed funds rate early, I believe June was the first one, or maybe a little bit earlier than that, but they started lowering the Fed funds rate in the middle of the summer, at which point buyer demand started picking up. Demand continued picking up, which helped sellers, continue to outpace the market, if you will, by putting homes on the market. Inventory continued to move. So, what we have right now is still a shortage of inventory. A lot of people at the beginning of the year thought that inventory was going to continue picking up throughout the end of the year, and at the end of the year we'd have a surplus. But at this point, we're still really low on inventory, which means things are still really moving. And it's partly due to buyer demand, but it's partly due to just not enough properties coming on the market to start with. The ones that are coming on the market are still selling, and the ones that are sitting, there's a couple of different reasons that they're sitting, but primarily there's a lot of overpricing. We're seeing a lot of properties on the market that are overpriced, and a lot of price reductions happening over time. And over time, those properties continue to sell. So things are still moving. Days on the market have gone up, which is expected for this time of year as we move into the holiday season, if you will, because we're nearing the end of our fall market and we're moving into what we consider our holiday season, which is going to be Thanksgiving and Christmas. During this time, the market tends to slow just because of the time of year. Not a lot of people want people walking through their houses during the holidays. Not a lot of people want to put their house on the market this time of year. So if you're not on the market already, it's probably not the best time of year to list your house unless you have a need or reason to sell right now, because the market is going to likely continue to slow with buyer demand kind of easing up through year end. And generally our market starts to pick up again sometime around the Super Bowl. And I think that's probably a nationwide thing too, not just locally. So as we move towards the end of the year, what you'll see is less inventory, less buyer demand. Things will slow a little bit, but that doesn't mean things won't move. There are still a lot of buyers out there looking for the right property. I'm working with a lot of buyers looking for the right property. The caveat with that is that if it's not already on the market, chances are they're not going to find it, because you're not going to see a lot of inventory come to the market this time of year for the reasons that I mentioned just a moment ago. But there are still a lot of buyers out there. So if you're interested in putting your home on the market, just make sure that it's priced right from the start, because, again, there are a lot of buyers out there. Rates are still really good. And it's a good opportunity to sell your house if you've got, something that's in certain price points, right? So if you're still under $1 million, things are moving pretty quickly, especially in our local market here in Huntington Beach. Now, as you move up into those luxury price points, once you get above $1.5 million, things start to slow, and then as you move above 2, 3, 4 million, things are still selling. It just traditionally takes a lot longer for properties in those price points to sell. The days on the market, I think above 4 million is like 565 days or something a little crazy. So, it takes those properties a lot longer to sell. So coming on the market with a luxury property during this time of year doesn't really matter one way or the other, because those properties traditionally take longer to sell to start. But in the lower price points, 700,000, 800,000, if you're priced right, you're going to sell quickly. Under $1 million, still the same thing. So sellers, if you're in those price points, don't shy away from potentially putting your home on the market right now, just because you have less competition, you have less people to deal with, and still a lot of buyers out there looking. Now, on the other hand, buyers, if you see something you like, I say this all the time, it's a good time to make an offer on a property just because of where interest rates are. We don't know what the future holds with rates. Money is very, very cheap right now, so it's a good opportunity to take advantage of, of interest rates if you find the right house. I wouldn't go out just trying to buy a house to buy a house. I would try to find the right one. And as we move into the spring market, chances are the market's going to pick up again, like it does every year, and we're going to, kind of have that spring selling market, if you will, where things start to pop, and you're probably going to see a 2 to 3% increase during that time, like you do every year. I did a video a couple days ago with regards to the recession. I'll link to it below right now. But if you go to my page and check it out, I talk about a recession in 2020. I don't think that's realistic. I think a recession is probably a little more likely in 2021 than it is in 2020. I think the fundamentals of the economy are still really good, and I expect those to kind of continue for the most part for next year. I think with the political situation the way it is, I don't foresee a lot of changes happening with regards to the market. And I think with that said, and inventory being where it is and interest rates low, I think the market's it still has more steam. It's likely not going to pull back at this point. If worst case is, I think it moves sideways versus down. So, the market, again, is very much like it's been over the last couple of months. The only thing I can tell you is moving into the next couple of months, it's gonna slow, right? It's normal for it to slow this time of year. But there's nothing to worry about. Don't look at as a slowing down as something is wrong with the market or that things are changing. It's normal for this time of year. This is a historical trend that happens every year, and it's not going to be any different this year. So if you do have questions though about the market, comment below. Feel free to contact me directly. Would love to help guide you in the right direction. As always, if you haven't subscribed to my channel, please do so. Keep in touch with what's going on in the market. I'm here to try to educate and help you understand what's going on in the real estate world. And I appreciate you taking the time to watch. So if you have questions, feel free to comment below. Contact me directly, like I mentioned. Otherwise, I do appreciate you taking the time to watch, and we'll see you again soon. Bye-bye.